Welcome back, guys, to another exciting video today. Today's video, I'm going to talk about 4 REITs that analysts are saying is 100% buy rating, and they pay dividends to you. It's an awesome video, so stay tuned. You're going to have a lot of fun watching this and learning something new. So let's get started. So first off, for everyone who doesn't know what a REIT is, it's a real estate investment trust. And basically what that is it's a company that owns, operates, or finances income-producing real estate. Now, a cool thing about REITs is anyone can own REITs. Now, essentially, REITs are a corporation that owns and manages a portfolio of real estate properties and mortgages. Anyone can buy shares in a publicly traded REIT. The stockholders of a REIT earn a share of the income produced through real estate investment without actually having to go out and buy, manage, or finance any property. REITs must pay out at least 90% of their taxable income to shareholders, and most pay out 100%. In turn, shareholders pay the income taxes on those dividends received. Now, a lot of these REITs pay monthly dividends and quarterly dividends, but the 4 that we're going to talk about today are going to be paid out quarterly. So let's get started. Now, I like to use the Robinhood platform to look at all of my different stocks. I also like to look at the NASDAQ calendar for dividend history and a few other sites that I like to use as well. But today we're going to stick with Robinhood. And if you haven't signed up with Robinhood yet, you could sign up with the link below and get your first free share and start your journey from $0 to $100,000 if that's something you'd like to do. Alright, so the first REIT right off the bat is going to be Invitation Homes, or ticker symbol INVH. Now the market price right now is at $28.59, and they're up 22% for the past year, as well as 42% in the past 5 years. Now, they were listed on January 31st, 2017, so they don't have quite a 5-year history, but as you can see, the growth there is exponential. It's amazing. Now, 88% here of analysts are saying to buy, so it must have went down since I did a little bit of research. 628 people on Robinhood app own this company right now. And basically, Invitation Homes Inc. engages in the acquisition, renovation, leasing, and operating single-family homes as rental properties, including single-family homes and planned unit development. Its services include property management, selection of homes, maintenance programs, and online payment. Now, the company was founded by Marcus Ridgway, Dallas Tanner, and Brad Grewe in 2012, and it's headquartered in Dallas, Texas. It employs 1,231 employees, and they have a PE ratio right now of 11K. Now that's probably not right. Robinhood doesn't have the best statistics on the PE ratio, but on a couple other sites it was saying NA. So if you guys know the PE ratio, go ahead and drop it down in the comments below. They got a market cap of $15 billion and a dividend yield of around 2%. Now they have an average volume of 3.27 million, so there's definitely a lot of trading going on with this company. Right now they're 28% higher right now than their average price paid, which is, that's showing growth, which is good. 88% are saying to buy out of 17 ratings right now, and 12% are saying to hold. Now their earnings per share looks like it's right underneath 33 cents. Which is pretty awesome. It looks like they've been expecting around the 1 or 2% mark and have been beating those expectations. Now, Invitation Homes Inc., or INVH, right now has been having payouts since they started their IPO. Back in May 11th, 2017, they paid 6 cents to their shareholders. Now, August 14th, 2019 was their most recent dividend payout at 13 cents per share per quarter, which isn't bad at all, guys. I definitely would keep an eye out on this Invitation Homes and see where they end up later. Now, moving along to NRZ. which is new residential investments. Now, I've been talking a lot about new residential investments for quite some time now. It's at $14.30 right now to buy, with 100% of analysts saying to buy right now. 27,000 people own this company on the Robinhood app right now. Now, with that said, it is down 22% in the last year, but let me tell you why. Because its growth is amazing, guys. In 5 years, it's actually gone up 50%. And with that said, going up 50%, it's got to come down a little. And that's where you get that 22% drop in the last year. But overall, 5 years total at 14% gains. That is pretty amazing, guys. Now, New Residential Investment Corp is a real estate investment trust, or a REIT, which focuses on investing and actively managing investments related to residential real estate. Now, it's operating through the following segments: excess mortgage servicing rights, or MSRs, servicer advances, real estate securities, residential mortgage loans, and consumer loans and corporate. So they're a little bit more on the back end. They're more like internal into the actual real estate. But their CEO is Michael Ninrenberg. I'm probably messing these names up pretty bad. But they were founded in 2011 in New York, New York. Now, they have 3 employees right now, but they have almost a $6 billion market cap, guys, and a 17 PE ratio, just shy of 17. With a dividend yield, guys, of, look, 14%, which is pretty amazing, with an average volume of 4 million. So there's definitely a lot of people trading this in and out every single day. They're 15% lower right now to buy than their average price paid. Now, that can be a good thing. Now, you're going to be getting in at a much cheaper price than the average. And that just means 2 things. It's either going to be going up and up and up, or it's going to be going down a little. So do your research. But in my opinion, I believe it's going to be doing nothing but going up. That buy of 100% there. And it looks like they've taken a little bit of dip in earnings, but as you can see, their high was 63 cents, their low is 53 cents, so they're not really that low. It might look different on the chart, but right now they're only about 10 cents lower in their earnings per share than 2 years ago. So, well, since the quarter following 2018. Now, this company, in my opinion, is a great company to get involved with if you are first starting out with any type of real estate investment. And let me tell you why. Because every quarter, the most recent payouts have been 50 cents per share. And they have been giving payouts since June 11th, 2013. They started at 7 cents and literally almost tripled it overnight. They're going 17.5 cents per share, and then they doubled it again in 2014 to 35 cents, 2015 to 46 cents, and now we are the last 2 years since 2017. They have been paying a consistent 50 cents per share on a $14 company, guys, every single quarter. So that is pretty awesome. That's definitely in my books for a buy. And that is something that I will be purchasing here very shortly. Moving along to the next one, it's going to be Starwood Property Trust. Now, as you can see, they are also 100% buy rating. Almost 4,000 people on the Robinhood app own this company right now. And the current share price is $23.49. Now, in 1 year, they have gone up 6.63%, which isn't bad at all for a real estate investment trust. That also pays you money out. Now, it looks like they are down about 1%, guys. 1%. That is 32 cents down. And in that year, I can guarantee you that they have paid you out more than 32 cents in the last year of you just owning it. Now, let's get into some of the abouts. Starwood Property Trust Inc. engages in originating, acquiring, financing, and managing commercial mortgage loans and other commercial real estate debt and equity investments. The following segments that it operates through is real estate, commercial, and residential lending, real estate property, infrastructure lending, and real estate investing and services. So they also they're more on the back end as well, more of like the financing and the loans kind of thing. They don't actually own actual real estate itself, but they own the actual loans and the debt and equity of those investments. Now, Barry Stewart Sternlich founded this company in 2009 in Greenwich, Connecticut. He now employs 290 people and has a $6.61 billion market cap, guys. So they have a lot of money to play with here. They have a PE ratio around 17.5% right now, or 17.5 about PE ratio, with a dividend yield of close to 10%. Almost 10%, guys. That is pretty freaking awesome that they are paying 10% out per year, with an average volume of 1.46 million people trading this actively. It is 8% higher right now, so it is showing strong growth. 100% buy rating of 7 analysts, and the average price paid was $21.69. Earnings per share currently are around, it looks like about 50 cents per share in earnings per share. Quite a substantial increase from the Q1 earnings of 2019 at the beginning of this year. So, with that said, guys, they are paying a pretty nice dividend. As you can see, they are paying 48 cents per share, just shy of 50 cents per share. They've been paying consistently since 2013, 46 cents, then 48 cents, up to 48 cents still. So they're actively and consistently paying out quarterly dividends of 48 cents per share on a company that costs $23.49. Combined with the last company that we just talked about, that would be $1 every quarter, which isn't bad, guys. That's not bad at all for only a couple of companies. Moving on to the last company, I know this video is probably getting a little bit longer than we'd like it to be, but let me show you guys the last but not least, Equinix, or Equinix, EQIX. Now, this company has gone up 28% in 1 year. 92% of analysts are saying to buy it right now, and 732 people own it on the Robinhood app. But guys, as you know, who's been watching my channel for a while, when I bring up these companies that I find on Robinhood, a lot of times they start out with less than 1,000 people that own or know about this company on Robinhood. And then I do these videos, and 6 months goes by, and it goes up to 2 or 3 or 4 or 5,000 people. So guys, get in on these companies now that you can, because if you would have got in on this company even December 24th, 2018, you would have paid $339 for that share, and it would have gone up to $550, guys. So there's money to be made, most definitely. In 5 years, this company has gone up 172%. 172%. That is $347 increase from when you could have bought it in 2014 for 200 bucks. Could have bought 5 shares for 1,000, and now you'd have 5 shares of 550. You'd be at almost $3,000. Wow, amazing, amazing. All right, moving along, guys. Equinix Inc. engages in the provision of collection space and related services. It operates through the following geographical segments: America, Europe, Middle East, Africa, and Asia Pacific. So the CEO is Charles J. Myers. They founded this company in 1998, so it is a little bit older, in Redwood City, California. They employ 8,000 people, and they have a $46 billion market cap, guys. That is a ton of money. That is about 10 of the previous companies that I just talked about in one company. They have a lot of money here. Their PE ratio is saying it's around a 91. That may or may not be correct. Do your own research. And a dividend yield of 2.6%. Average volume of 359,000 right now on the Robinhood app, because not too many people know about it, and it's also kind of a pricey stock to get in on. But price paid right now is 33% higher right now than their average of $412, which is just simply amazing. 92% of 24 ratings from analysts are saying that it's a buy. 4% are saying a hold, and 4% are saying to sell. Now, right now they have a earnings per share of, believe it or not, just shy of $6 per share, but with a stock price of close to $550, you better be getting some type of earnings per share on your investment. So it looks like they've been doing rather well for quite some time. It looks like this company is probably not going to be going anywhere anytime soon. So definitely do your research, invest in this company if need be. And remember, guys, this company pays $2.46 per quarter. So not only has it been going up substantially over the years, but it also has been paying its shareholders quite a bit of money, since 2014. Looks like they paid $7.57 to their shareholders. How awesome would that be? Or October 2015, they paid almost $11 per share to their shareholders. So they must have had a really great year that year, really good quarters, and looks like they have just been going up since then. $2.46 was the most recent dividend payout in August 20th. So guys, these companies can make you money in the long run if you let it. And if you guys enjoyed this video, please subscribe to my channel, and remember, investing does take time, but if you do it correctly, you'll only have gains and profits. Thank you for watching. Don't forget to subscribe and smash that like button. Have a great day.